My journey didn't start with stocks, it started in the wild west of investing, cryptocurrencies. Back in 2017, Bitcoin was skyrocketing from $3,000 all the way to nearly $20,000. I thought I had struck gold. I was buying all sorts of altcoins, and at first, it felt like I couldn't lose. My capital quadrupled in no time. But here's the truth, it wasn't skill, it was luck. And luck always runs out. I started dabbling in leverage, trading on 1-minute charts, and obsessing over technical indicators like Ichimoku clouds. It makes me laugh now, but back then I really thought those clouds would predict my financial future. Instead, they destroyed it. I wiped out about 97% of my crypto portfolio in a very short time. And from that painful loss, I learned some key lessons. Be skeptical of technical indicators. Never use leverage. Invest only in assets you understand. Always respect the downside risk, and forget about shorting. After losing big, I stepped away from investing for a few years. But then, March 2020 hit. The world shut down, markets were crashing. I remember sitting in a hotel lobby, reading a newspaper headline, "The market has fallen 23%. And suddenly something clicked. If the market is down this much, I thought, there must be stocks on sale. That moment changed everything. I opened my very first brokerage account, and this time, I promised myself I'd do it differently. YouTube became my university. I dove into value investing, the difference between price and value, competitive advantages, and the concept of margin of safety. And for the first time I started to understand how wealth is really built. My philosophy became clear. No one cares about my money as much as I do. Not banks, not funds, not managers, me. When I was younger, I had handed my savings to the bank, and I remember looking at the pathetic single-digit returns while the bank itself made huge profits. That was the day I realized, if I don't manage my own money, someone else will mismanage it for me. So I committed to thinking long-term, not as a trader, not as a speculator, but as an owner. Every stock I buy, I treat it like a business. I imagine I know the managers personally. I imagine I've entrusted them with my money. And I want to trust that they'll do the right thing, even when times get tough. During the COVID crash, I made my first real investments. I bought companies like Alibaba betting on China's growth story, Aritzia, a fashion brand thriving through e-commerce, Bank OZK, a well-managed bank idea I cloned from Philtown, Micron and Seritage Growth Properties ideas I picked up from Manish Pabrai, Bausch Health, inspired by Bill Miller and Francis Cho. Some of these worked, some were disasters. For example, Bausch Health was supposed to be a sum-of-the-parts play, instead it turned into one of my worst investments. Meanwhile, Aritzia's pivot to online sales showed me what a true competitive advantage looks like. The lesson? Even cloning great investors only works sometimes. You still need your own conviction, your own analysis, your own why. Looking back, my philosophy has been built on trial and error. From losing nearly everything in crypto to finding stability in value investing, these lessons now guide me. Think like an owner, not a trader. Trust in compounding. It works, but only if you stay patient. Focus on businesses you understand. Never forget, managing risk is just as important as chasing returns. And above all, trust yourself. No one will protect your capital like you will. When I invest, I look for businesses growing their earnings or cash flows by at least 15% a year. Sometimes I find companies doing 25% or more. That's where real wealth is built. But here's the catch. In the short term, the market doesn't care about the fundamentals. A single bad quarter, even if it's just a one-off expense, can send a stock tumbling. And this is where most people lose. They panic, they sell, they forget the long game. For me, if the long-term growth is intact, I don't care what the market does today. I'm in it for the compounding, not the drama. Here's another important piece. I don't compare myself to indexes like the S&P 500 or TSX on a daily basis. Why? Because my goal isn't to beat an index, it's to double my money every 5 years. That's my compass. Absolute performance. Comparing yourself too often just creates bias and emotional mistakes. To protect myself, I only check my portfolio performance once a quarter. That way, I don't get caught up in the noise, and I don't let Wall Street's obsession with short-term performance distract me from long-term wealth. This is the cornerstone of my philosophy. I don't see stocks as ticker symbols on a screen. I see them as real businesses run by real people. When I invest, I imagine the managers are friends or close associates, people I've chosen to trust with my money. If they hit a rough patch, do I instantly abandon them? Of course not. I give them a chance to recover because headwinds are part of every business journey. This mindset keeps me grounded. It helps me avoid panic selling, and it lets me focus on what truly matters: compounding. Seth Klarman once said, "Investing is the intersection of economics and psychology. Successful investors do very few things but do them well." That's exactly how I try to invest: patiently, deliberately, with conviction. Because here's the truth. All great businesses suffer massive drawdowns. Berkshire Hathaway, down 40% 3 times since 1990. Amazon, 6 times down 50% since 1997. Microsoft, down 40% 4 times since 1990. If you had sold in fear during any of those drops, you would have missed out on life-changing returns. So when I hold a potential compounder, I'll endure the pain. Because the reward for patience can be extraordinary. Here's a real story from my own portfolio. One business I own has grown its earnings massively over the years. Fundamentals strong, future bright. But the stock price? The market has punished it. Its PE ratio falling from 28 to just 10. Every time I consider selling, I ask myself, if the stock market didn't exist, would I still want to own this business? And the answer is always yes. That's how I know I'm investing the right way. At the end of the day, my philosophy is simple. Look for strong, long-term growth. Focus on absolute performance, not relative benchmarks. Think like a business owner, not a trader. Hold through the storms, because compounding only works with patience. So let me ask you, do you see your stocks as just numbers on a screen or as pieces of real businesses? Drop your thoughts in the comments. I'd love to hear your perspective. If you got value from this video, make sure to hit that like button, subscribe for more deep dives, and share this with someone who needs a little clarity in their investing journey. Thanks for watching, and I'll see you in the next one.